look at the impact of these tax changes is to actually think about what is the tax liability that individuals would pay under these new rate structures. I did a few things to simplify these calculations. Obviously, we can go more in depth, and Representative Johnson has the FNA to do this as well. But I did a few things. I basically just took option A, which before yesterday I think is kind of the more popular of the plans. And I quickly just said, we're going to start, I'm going to assume taxable income. I'm not going to do all of the calculations I need to get there. But if I assume taxable income at various levels, what are the tax savings that individuals would have seen under option A? You'll see here that for individuals below $21,000, there was no tax savings. That's because basically option A adopted the 2019 rate schedule that was already going into effect for those filers. From 25 to the 80,000 rate, 80,000 taxable income, you see a tax savings of about $166 per filer. Also note, you talked about this last month, that because of the fact that you allow married couples to file it separately on the same return, you actually, in some cases, you would double that for married couples, because they would, if let's say one spouse had $25,000 in income and one had 50, they would each be receiving that benefit. And then for individuals above that 80,000, you would also start seeing more increases in the statement tax savings on a dollar basis. But what I've also done is done this as a percentage of taxable income, which I think is actually the more interesting calculation. An individual that makes $250,000 is getting a larger tax cut than one making $100,000. But that's because the person paying $250,000 or that has $250,000 in taxable income pays more in taxes than someone making $100,000 in taxable income. So what this really shows is that option A, while it does lower those rates for those top filers, it's actually doing it in a progressive way. So you'll notice someone making $25,000 in taxable income as a percentage of their taxable income is getting a larger tax cut than someone at $50,000. Similarly, someone at $81,000 in taxable income is getting a larger tax cut as a percentage than the person at $250,000, even though on a dollar basis they'd be receiving a larger tax cut.
And Nicole, I know you haven't had a chance to do it yet, but will you give us a similar analysis of the latest proposal?
Yes, and I plan to do that. I just didn't have time to do that yesterday. But so I just wanted to show this that there's a way to the way the option A is set up. Yes, you are cutting rates, particularly with that top rate for in the rate schedule, but it's still being done in a progressive sort of way, where the benefits are really going to lower income or more middle income, I should say, filers on a percentage basis. And I'll also note, calculating as a percentage is really kind of the standard in the tax economics field. You tend not to do it on this kind of this actual dollar basis. It's really this percentage is how we think about it as economists. This is actually the more interesting calculation. So now, what is the actual revenue impact? Some of this is what Richard just walked through. In the report, there are 22 specific recommendations. 10 of them have direct revenue impact. So what does that mean? And then obviously there could be interaction effects. We just talked about this, Richard did, and Paul did as well. That throwback and single sales score, those definitely have some interactions. I have taken the numbers as they are in the report. We would need to make some adjustments here once we have that final score. In terms of revenue increases, I'm getting about 51 million in revenue increases in the report. The largest, of course, being the change on remote sellers post the Supreme Court action in Wayfair.
Okay, we got a question here. If there's a pitch,
Thank you, Mr. Chairman.